2021 is the first year that I have any depreciation and any assets to depreciate. So depreciation on motor vehicles, depreciation on plant and equipment. And if I have a look up here and my settings, you'll notice that I've set the start date as 1 July 2020. So 30 June 21 will be the first year that I have any depreciation. And that equates to having some assets bought during the year. So 7th of September 2020, which is in that 30 June 21 financial year, we've got a Toyota Hilux bought. Just some navigation tips back into motor vehicles. You can see the settings are set up like this. So it's a business right within a company, and the category for the fixed assets, or the type of fixed assets we're talking about, is motor vehicle. That's important. I'll show you why in a moment. And the same for plant and equipment. You can navigate back to our plant and equipment settings for the group. So the plant and equipment group, you can have as many assets in this group as you like, of course. Same again, it's business, non-primary. This time it's linked to plant and equipment. We've imported our accounts from Excel. Let's have a look at the 2021 year. And we'll see we've got depreciation for motor vehicles and plant. And we've got our cost and accumulated, cost and accumulated. Our mapping is as such. We've got our plant and equipment at cost account. So this is mapped accordingly. Non-current assets, fixed assets, plant and equipment at cost. And the accumulated map there, so that's plant and equipment. And if we were to look where the motor vehicles are mapped to there and there, which would be there and there, and we've linked the accumulated depreciation with that asset group. And the same with the plant and equipment, we've linked the accumulated to the asset group. And then the expenses, we've done the same again. We've linked the plant and equipment depreciation to the asset group, and the depreciation on the motor vehicles to the asset group. And that will help with the working papers, but certainly let's go and have a look at the forms. So for 2021, how will this look? So we come into the business section here. Okay, I don't see anything in there actually, so maybe I need to just take that 21 form out. Let me add it back in. Start again, just so that it'll pull the data in. So now we should see that the mapping of that depreciation has mapped into and from our imported accounts to the correct category here. And in our reconciliation section, you can see the system treats it like this. So it treats the accounting value depreciation as non-deductible. So the accounting value coming in off the Excel template, because I imported these accounts from Excel, as non-deductible, and then it treats the decline in value as whatever's coming off the calculator. So that 14,873 is coming off of the depreciation reports. So let's just go to our depreciation reports. So the 9154 and the 5719 is equal to that 14,000 odd in the form. So as you can see, the depreciation in this case is coming in. It's coming in and getting excluded as non-deductible from an accounting standpoint. So non-deductible accounting depreciation, and then getting treated as deductible from a tax standpoint. In this case, the values are one and the same. So if we have a look over the depreciation section here, deduction for decline in value, plant and equipment and motor vehicles. The cost of the assets first deducted, which is the plant and equipment and motor vehicles, the 25 and the 45 for the purchase during the year. So if we had a look back up here, go back into there, the 25 and the 25 and the 45 purchased. I'll just navigate backwards, come back in here. The total adjustable values at the end of the year. This is the written down values, the 19 and 35. Okay, so this is using the non-SBE method. This is the non-SBE method, right? Now, in terms of what will happen at the working paper level, let's have a look. Okay, so I still need to start again afresh on these since I've started with a completely new import. And what do we have now? So if we go to our motor vehicles, we can choose our schedule, motor vehicles. You'll see the calculated expected values from the depreciation schedule comparing nicely with the accounting values. And then we could certainly agree to those. The same with the depreciation, agreeing nicely. Choose the schedule, mapping nicely. So I'm the accountant carrying out my validation on those. We're comfortable with those. And so our working papers are half done, and certainly someone could come along now and we would complete those. Someone could come and approve them, and then they would become locked, right? Now we've only carried out validations across those, but certainly we now have our form completed, our working paper completed. And if we looked at our custom reports, let me just remove these and start it fresh. Trading set 21. And if we have a look at our comprehensive income in here, we've certainly got our motor vehicle and plant depreciation, and those will map and compare nicely with what you saw in the working papers and the tax form, and the same down here. So motor vehicle at cost, less accumulated, and the same over here for the plant and equipment at cost, less accumulated.